Last day of the week, jobs. The number came in as expected, pretty much. So it's muted response. After a gap open higher, we went lower, kind of an opening drift. And what I wanted to tell people is if you could crack in below these green lines, you could go to some of the lower targets. This 75 was yesterday's close. It was yesterday's high, and it was the overnight low. So this is an example of I was slightly wrong, but not wrong for long. The reason why I say that is because I thought that in here there was a chance they get through. I don't sell it in my green edge zones because it generally doesn't work. So I wait. I could be bearish, but not sell it. And I was kind of bearish. I thought they could jump into yesterday's zone or yesterday's range and really scare the people who were bullish because of a gap open higher from yesterday. So they didn't. What I mean by that, they didn't. About halfway up this up bar, I told everyone, hey, it's a transitional moment. I'm no longer thinking that the market's going to go lower. So, in fact, I said the market is bullish and we're going to find some upside. And that was like in here. And there was some rotations that were shallow. And I said, most people probably didn't catch this shallow rotation. So there's going to be more upside. And it went sideways to higher, kind of quiet, caught another bid. Again, each retracement was shallow, which kept shorts that kept thinking it was going to go down, stuck. What I mean about a shallow retracement is when a market jumps up and goes from, in this case, bearish to bullish, most people, first of all, don't recognize it. So people who are short in here, in there, on the way up, now they're taking all this heat. And so what are they looking to do? Well, let's draw it out. And what they're looking to do is they're looking to buy it like baby birds. They're trying to bid it. Well, if it's a shallow retracement off of this move up, here, let's just draw it over here. If this is a move up, this is a deep retracement. This is the move up. This is a shallow retracement, and then the re-rally. So when you get a shallow retracement, you get people who are short trying to bid, and they're not getting it. So as you start moving back up, what I told people, if you got it, you got it. Meaning you got a lot of people that'll keep this thing a little bit buoyant, and it was to the tune of like a 9-point move, which is a good move on a day like, especially on a day like today. But the thing is that when you get, this is kind of a protracted head fake. When I say this is the consolidation box, it kind of took a while to dump down and then come back in. And this move lower after the open created the notion of this. And I wrote this and people liked it. Less longs when you move lower is a result of moving, south. Shaking out longs means less longs. What does that equal? That means that there are less sellers when there's less longs. And you got to know that. If there's less longs, there's less sellers, period. And if there's less sellers in the price of anything, then it's easier for that price to go up because less sellers, LS, equals a cleared path for the upside. Let's say everybody wants to move into a neighborhood that has all these houses and nobody's selling. Finally, one guy says, I'm going to sell. He probably is going to ask for a lot and could get more. It's a well sought after neighborhood, which means there's a lot of buyers. And if there's a lot of buyers and not a lot of sellers, then the price could go up. And that's what happened in this situation. They shook out a lot of longs in there. Let me erase some of this illustration. They shook out a lot of longs. Now, we don't know that this is playing out, but in real time, you can start to predict that when it drives up that quick in there. And that's the value of this room is real time, change your mind, real time analysis. You don't have to be short if you're bearish, long if you're bullish, but you need to transition and understand changing your mind is good. If you don't change your mind, then you're in the wrong business. Because look at this chart. This chart is just constantly changing its mind as to what it wants to do. And if you're not, if you're changing your mind too much, that's not good. But if you're never changing your mind, that's terrible. Always remember, after you buy it, you're a seller. If you sell it, you're a buyer. But yeah, this was good support. Even though it was a little bearish down in here, I wasn't once we got about halfway up this bar. And then it became bullish, shallow retracements. And the shallow retracements. If you remember nothing from this highlight, remember this. If the market rallies and then starts coming down and starts to re-rally, that's a shallow retracement. And you got shorts that are trying to buy it to get out looking like this. These big, giant grapefruit eyes. They're cross-eyed. They got a stupid-looking mouth. Probably got ugly hair. And they just can't get out because they stink at trading. It's okay to be wrong. It's not okay to be wrong for long. Have a great weekend, guys. We'll see everybody Monday.